Wrapping up the April 1st market update, residential sales here, ending Q1. Here's how the numbers looked. The 30-year fixed rate is leading the headlines here. It just spiked to 6.38%, which is a 6-month high. The Middle East conflict is pushing oil above $112. The Treasury yields are 4.43%. Now, the rates had been averaging 6.18% for the first 2 months of 2026. The spike reversed real momentum there. Now, still lower than a year ago when we were sitting at 6.65, but the Fed held steady at 3.5 to 3.75 in March. No cuts on the horizon. The bottom line, buyers who moved early in Q1 locked in better rates, and those who are waiting are now paying for it. The headline here in sales, they're accelerating. Combined closings across Johnson County and Jackson County, 3,593 year to date, which is up 5.9%. Johnson County, there were 1,665 closings, up 10.8% year over year, and that is significant. In Jackson County, 1,927 closings, up 2%. Now, people are buying despite the noise, despite the rates. Transaction volume is accelerating. So update yourself on that story. Now, the pending market, or what's coming next here, 1,972 contracts currently in the pipeline. Johnson County with 1,023 pending. Jackson County with 949 pending. So those are April and May closings that are already locked in. Pendings are the leading indicator, and they're pointing forward, not backward. In regards to inventory and absorption here, combined active listings 2,946. The absorption rate in Johnson County is a little tighter at 2.31 months. Jackson County at 2.59. Both firmly sellers markets. Now, if the properties are turnkey, properly priced homes, they're moving in under 30 days, no problem. Overpriced listings are sitting and even expiring. I want to talk about the luxury market. $1 million plus is what we're going to call luxury. This is where the data gets interesting. Johnson County, $1 million plus closings, 157 units year to date, up 57% from last year. So this is kind of interesting because if you look at the news, you would say there's a lot of uncertainty. People are scared about what's going to happen with war and economy and all these things. Up 57% in regards to the luxury division here in Johnson County. The 1 million to 1.5 million band alone posted 96 closings, which is up 74% from 55 the previous year. There's 131 active and 83 pending in that market. So strong turnover, not stagnation. The $2 million plus tier nearly tripled. 29 closings versus 10 a year ago. With only 26 active listings, supply is actually tight at the very top, $2 million plus. So Jackson County $1 million plus is smaller but growing. There's 29 closings, up 26% from 23 the year before. Jackson County $2 million plus properties posted 7 closings, which is up from 4, a 75% jump, but only 10 active and 0 pending. So on top of that, the market is thin and selective. Now, the takeaway, luxury buyers are less rate sensitive. They're driven by lifestyle, relocation, long-term wealth positioning. If you're sitting on $1 million property in Johnson County and thinking about listing, the data says your buyer pool is deeper and more active than it has been in years. Overall, where are the buyers looking? Johnson County, 350 to 600 is where sold and pending activity is the heaviest in this core market. Jackson County, 220 to 350 remains the sweet spot. Now, above 700 in both counties, outside of these luxury surges, the inventory is building and taking a little longer to move. So below 140 in Jackson County, drying up completely. Now, on the supply side, new construction, rental, foreclosure, There's 342 single-family permits in January. That's up 16% from last year. The builders are confident heading into spring. It's clear on that. The rental vacancy, 6 to 7% metro-wide, tighter in Johnson County at 4.5%. Now, some landlords are selling instead of holding. That adds inventory on the buy side while keeping the rental supply constrained. Now, renters watching rates they quiet the future demand. When rates settle, they will enter the purchase market. And that's basically what we believe they're waiting on there. So foreclosures are at normal levels. Nothing to report here, not a distress signal, just standard market churn that we monitor and no issues on that. So this market performed all of Q1 here with rates above 6%. And it's proving that it does not need perfection to function. 1,972 pending contracts carry us through the spring. Now, if oil settles and rates pull back towards 6.25 by midsummer, another wave will activate. So inventory is tight at 2.46 month. Construction is modest. Rentals are constrained, and all supporting price stability. That's what they're doing. The luxury segment is outperforming every other tier in Johnson County, and that is a confidence signal from the highest net worth buyers in the market. Now, the wild card is geopolitics and rates, but the fundamentals underneath it are sold. Now, if you're thinking about making a move in Kansas City, whether that's $200,000 starter, $500,000 move up, or $1.5 million, the data says the market is functioning and rewarding action over hesitation. Now, reach out. I'll give you the strategy, not a sales pitch. I'm David Van Noy. This has been the Market Update.